since we have a consumer who is providing a consideration that is non-monetary, like data in this case, is the service provider the one obliged to pay the tax? Digital services, taxes and geopolitics, the European dilemma. And we forget, at least in Europe, that we have a very interesting tool to deal with these matters as well, which is VAT.
I understand that you advise to different governments on how to design tax law.
Was my case in Indonesia that I work very closely in the implementation.
The consumer that uses Facebook still uses it in the very same way. He doesn't pay anything additional. The only entity that will pay is the provider of the service.
Welcome to the Vatvocate podcast, where we explore all things value-added tax to give you the insights you need as a VAT professional.
Hello, everyone. My name is Paweł Mikuła. I'm an independent VAT advisor, a frequent speaker and writer on value-added tax. And this is Vatvocate podcast, a place where we talk everything about value-added tax from the European and global perspective. And today with me is Leopoldo Parada. Hello, Leopoldo.
Hi, Paweł. Thanks so much for having me.
Thank you. How are you doing?
I'm doing well. And with a lot of things, a lot of troubles. This is a time of the year where I have several commitments. So I'm jumping from one plane to the other. But
yeah, I understand. If I can tell that you were on one hemisphere, I guess, and now you're going to the other tomorrow, right? You just came and you go further to.
That is correct. I was in the Caribbean. I came back to London for 2.5 days, and then I'm going to Singapore tomorrow. So
yeah, perfect. So first of all, I would like to thank you for accepting my invitation. It's a great honor for me to have one of the first tax persons on the planet. So thank you once more for this. It's an honor.
Well, thank you so much for having me, Paweł. I think that. I was really happy when you invited me. We had the opportunity to chair in Brussels as well, and I think that I'm always happy to join.
Yeah, thank you so much. So let me just introduce you and a few words. So you are a reader in tax law at King's College London. I would say citizen of the world, lived in many different countries around the globe. Graduated from School of Law in Chile, then University of Florida, then University of Valencia. Leopoldo is employed or was employed at the University of Amsterdam, Luxembourg, Leeds, Turin, and many others. Many times awarded and honored with different awards and recognition. As I said, one of the leading person in tax world in the world. So quite an honor once more. Also, I understand that you advise to different governments on how to design tax law and so on, right?
That's correct. Yeah.
So this is let's say, resume, but your main field of studies and your main field of interest is international taxation, tax avoidance, digital services tax, I understand. Can you tell briefly about your main interest or main, let's say, directions in which you go right now with your interest, research, or advisory?
Absolutely. As you said, my main focus is basically corporate income taxes, and within that particular field, I've been dedicated mostly to anti-avoidance provisions and with extensive work on anti-hybrid rules, and then later on with issues related to the global minimum tax as well. Trying to give as well a policy, approach to my research, with a focus on developing countries and the impact of certain measures on developing countries, because as you also said very well, I work very closely advising some governments on the implementation of several, I could say, measures. Some countries, is related to most recent ones like the global minimum tax, but with others, we talk about, I could say, BEPS, space erosion and profit shifting things, that needs to be implemented. Like was my case in Indonesia, that I work very closely in the implementation of interest limitation rules. I touch upon indirect taxation only indirectly, as the name says.
Yeah.
Like
We'll move on to that. Why
yes.
you're here today? Yeah, on the podcast on
Yeah.
VAT. Yeah.
Yeah.
I understood that before we move to your newest publication, let's say, which is linked to value-added tax in some manner, you also, I understand that your book is going to be published on theory on tax avoidance. Is that right?
That is correct. That is a project that I have together with my friend and dear colleague Rita de la Feria. It's a co-author book by Oxford University Press, where we actually try to give a general theory of anti-avoidance, and as the name says, don't want to spoil the content, but the whole idea is to analyze, how the proliferation of anti-avoidance rules, especially in the last decade, what are the reasons for that? So what are the patterns, that bring us to say, specific or targeted anti-avoidance rules should be this way or that way. Perfect. Or even general anti-avoidance provisions.
Okay, that's very interesting. I can't wait to read that. When can we read that?
That's a very good question. Most likely we will have the draft sent to the publisher by next year, so early next year. So let's say February next year should be there. And then, of course, takes the normal process of publication. So let's say end of next year should be available in your bookshelves.
Perfect. I'm thrilled about that because I have this, theoretical touch on tax law, and I like to think from the theoretical perspective also on tax law. So this is when I saw the title, I got very interested. So this is very, very nice, and I can't wait for that. But okay, moving on a little bit closer to VAT and the reason why we are here. You, as you said, you are not dealing with value-added tax or indirect taxes very, very often, but you have written something on the things that touch on the value-added tax lately, right?
That is correct. Let me also say something to come back to what I said.
Yeah.
It's not that I don't know VAT. Actually, when I practiced full-time as a lawyer, I practiced as well on VAT. I practiced for almost 10 years full-time as a tax lawyer. And so I know VAT is just my research doesn't go directly on the field. But you are right. Recently, I wrote I could say mostly a policy piece, on is the title is Digital Services, Taxes and Geopolitics, the European Dilemma, and the idea of that paper is precisely to show that when we talk about taxation of digital services, we tend to go into this binary discussion of we have a global agreement or we have digital services taxes, what comes first? And we forget, at least in Europe, that we have a very interesting tool to deal with these matters as well, which is VAT.
Okay, perfect. So my vision of this podcast is to address it to people who are very busy tax professionals, for example, as I am. So let's say we hear about OECD, we hear about BEPS, we hear about Pillar 1, we hear about Pillar 2, we hear about the digital services taxes, but I believe that we hear something, but we don't have the whole picture. So it is something that should be explained to us, let's say step by step. So we are able to map all those notions, all those concepts on a mind map, let's say. So you have written about digital services taxes. Let's call it linked to or versus VAT. We will move on to that. But before we start, can you just try to map for us where all those notions or those concepts, how to find that on the mind map? So what is the relation between, let's say, BEPS, Pillar 1, Pillar 2, digital services taxes, and then we will move to VAT. So just to go step by step, maybe we will start about digital services taxes in general. What it is all about, when did it all start, who figured it out, why it was put on the agenda in a general manner?
Absolutely. So if we want to understand digital services taxes, we need to go back to, let's say, 2017, 2018, when the whole discussion was about how we tax, these big tech companies, that they have a strong economic presence, in different countries. They have high profits being generated, but basically we cannot do it because as per as we have the rules, on tax treaties, which is a way in which countries, they divide, let's say, the right to tax something, in this case, business profits. And those rules says if there is no physical presence in a country, there is nothing that can be taxed in that country in regard to business profits, right? So at that moment, the whole discussion was led by the OECD. The OECD thought we need to have a global approach to these matters because this is something that affects all countries. And in parallel, as while this discussion was taking place, or how we agree on this, what will be that global agreement that ended up being, that Pillar 1, countries started to realize we need to do something, in the meantime. We need to tax that somehow. And the whole trend of digital services taxes started back then in Europe. So the European Commission in 2018 proposed as a temporary solution the idea of taxing, these certain digital taxes.
Sorry for interrupting. So just to summarize this let's say part. So the people in OECD, or generally the governments maybe, noticed that there are digital big companies, let's don't hide it, in the United States mainly, right? That I understand that conduct business in different jurisdictions, or conduct business that is linked somehow to the economies of different jurisdictions, and those jurisdictions don't have revenue from that activity. Is that good way to put it?
Yeah, it's a good way to put it.
Okay, so that was the idea, and then let's say chronologically, let's say the first move was from the European Union to or it was simultaneously, or
I could say it started, I could say that the main focus of fire, so to speak, to put it in this metaphoric way, was within the EU, but you had countries, like Canada, that they also were quite active also from the very beginning with the idea of the DST.
Okay, so but I understand that we are talking here about generating revenue from different economies, that the economy where the company is seated when it has a headquarters. But the digital economy was this trigger, right? Or everything that is going in around e-commerce, digital economy, platforms, those things triggered the discussion, right? Or would you identify it in different places?
I could put it in this way, Pavel. I would say the whole thing came about, service providers, what type of services you can provide. And so far, at least in the corporate income tax area, we tended to live, in this very old-fashioned way of doing businesses, and we thought, services can only be provided if you move physically somewhere else, and then suddenly the reality of the economy started showing that that's not true. That most of the services are provided, without the need of being anywhere. Right now, when you look at online advertisement, when you look at, I don't know, digital intermediary activities like what Amazon does, all these sort of services, that there are still services which are highly digitalized, the issue is incremented. So you think in these situations, you really don't have the possibility to have a physical presence in another country, but you still have that market where you provide those services. So if you put it in a different way, your users are still there.
Yeah. And of course, digital services are those services which are most valuable and generate the most revenue. And it was most obvious to think about how to tax digital services in this context, as I understand, right? Although we are talking about all services, the digital services are the most important here.
I couldn't say that they were the most important ones, because it depends on the country we are talking about. If we talk about a very small country, let's say an island country with very little amount of users of different platforms, of course, digital services are not the most important ones. But I could say the whole thing here was that all these services were concentrated in a few companies, as you said before. So those companies were certain American companies. Yeah. And someone thought, we have two options. We just let things go as they are, or we try to catch those tax revenues somehow.
Okay, so perfect. Thank you for this. And I interrupted you. So you were at the stage of the EU proposal. So let's focus on that. When was it? What was it?
So the EU proposal was in 2018. So the idea was to get, this temporary solution to taxing digital services, certain digital services. It was the proposal was focused on online advertisement, digital intermediary activities, and sale of user data. Those were the three main components of the scope of the digital services tax. Characterized as well because of very low rates. So it's only a 3% rates, calculated on turnovers on certain companies. Not all the companies will be subject to this. Only if you are certain revenue thresholds, you will be affected. Revenue thresholds that are both global and also what you had, within the EU. So the whole idea of the DST was we want to get certain companies that we know who they are, and we want to get those revenues that are uncollected so far.
So let's indicate it straight. So, for example, a US company that globally reaches some kind of threshold of revenue is subject to tax. And then when they sell those digital services that you mentioned, this revenue is subject to tax of 3%.
Yes, so you need to be so the threshold is what determines whether you are, first of all, within the scope, right? So you need this global revenue on this, of course, services, of 750 million euros, and the proposal for directive stated that you need at least 50 millions within the union.
Mm-hmm. So you have to have a global threshold and union threshold, with which you need to be above to be subject to this tax.
Exactly, and then a 3%, is applied.
And because of that, I understand that through that, the companies that were subject are pretty easy to identify, let's say, right? Because there are not many players that are able to pass this threshold.
They were indeed,
Okay.
right? So let's be honest with that. I mean, taxation works in this way. You can,
Okay, that's interesting.
if you want to tax BMW, you either go and tax BMW, or you say, I'm going to tax, all the automobile companies that they produce over a certain amount.
Yeah, in the rule of law
I
and
can only
everything.
tax
Yeah,
BMW.
you need to as they during my studies they said that the norm has to be general, abstractive, and so on and so on. But we know who are we talking about, of course. So
Yeah.
okay, so there was a proposal of the European Union for a directive to tax those companies with digital services taxes in a way that they pay 3% on revenue, and this revenue, this tax revenue from this tax goes to the generally EU budget or national budgets, right? And what happened? What happened with this proposal? Are there chances that we will see it in force, or how does it look like? We're talking about EU proposal right now,
Yeah,
right?
the EU
Yeah.
proposal. So what happened back in 2018 was that there was no unanimity to approve the directive, so the proposal actually failed. Right. So that's as simple as that. Some member states were very much against the idea of taxing, these companies, particularly, thinking about how targeted certain companies were. So they said, we don't want to go this way. Let's wait until the OECD comes with this global solution.
Mm-hmm.
So they said no, the proposal failed. Now, your question is very interesting because you say, are there any chances that we talk again about an EU proposal? And I would say, of course, because now the geopolitical situation is different. The EU is in a situation that they need to produce own revenues. And we have heard, you have heard, I have heard as well, how the Commission is thinking about this idea again, right? We still don't know whether they will do it in the same way. Hopefully not, in terms of design and other issues, but they want to have an EU levy or an EU digital services tax again back on this scene. That's what we know so far.
And in terms of geopolitics, I understand that they play a role here. So, of course, the reason, as you said, the formal reason was that there was no unanimity, so there was no chance to pass the law on the European Union level. Unanimity between the European member states. But I understand that always behind decisions like this, there are geopolitics and power play. And can you comment on the real reasons? Why do you have any, I don't know, anything to comment on that?
Absolutely. And it's very interesting that you asked me that, because I gave you the formalistic answer. So the proposal failed because there was no unanimity. That's what we tend to repeat in Europe. But I personally believe that the proposal failed not only because of that, not only because of a formalistic, reason, which is a unanimity requirement that you need for a directive. For me, the proposal had three main problems, that we can call it this way. First of all, if you look at the idea of taxing very targeted group of companies on digital services taxes, so with this high revenue threshold, what you do is to isolate, let's say, those potential companies that they can pay the tax. If you come back to the original question, which was how we address the problematic of the lack of physical presence in cases where services are provided without having that physical presence, because we started there. The whole discussion here on digital services taxes, the whole discussion on the OECD Pillar 1 started because so far business profits cannot be taxed, let's say in the source jurisdiction, the market jurisdiction, unless you have any sort of physical presence there. Mm-hmm. Now, that problematic is not really addressed, or is addressed only partially by digital services taxes, because when you say, I'm gonna give these countries the possibility to tax, but only this very specific services and only these very targeted companies, you leave the problem open for the rest, right? So there is no solution for the rest of the cases where you have still, services being provided remotely, and you can, escape taxation in the source country. Now, there is another problematic, I could say, very much associated to how DSTs were structurally designed, which is this idea of thresholds, right? So, and the potential, I could say, legal challenges that they can come from there. When you design, a tax like this one, using high revenue threshold to determine which companies will be subject to the tax, you have potentially issues on discrimination. Now, as a good European tax expert, you could say, well, but if we have the directive, we don't need to care about that, right? So there is no discrimination if it is in the directive, at least under European law, that is, I could say, correct. But the problem that happened with DSTs is that the proposal failed. Other countries in Europe started, to copy the idea, and then you might really have an issue under European law there. But even if it's not under European law, you shouldn't forget that we live, in a global world, and we are subject to certain rules globally, and those rules they are clearly stated in the World Trade Organization. They also talk about de facto discrimination. They also protect, the possibility of discrimination in this situation. So if you have a service provider and you are targeting a particular service provider, even if you do that implicitly or de facto, that amounts to discrimination, right? So
these are, let's say, legal arguments that were. I understand that the member state did not deny the digital services tax, let's say, the directive, just because of the legal arguments, but they were afraid of the legal challenges, real legal challenges that could rise up after the implementation of this directive. So one thing was the discrimination under EU law. This is less problematic, as I understand. And the other thing is discrimination under WTO, which would be maybe more problematic, I understand. Okay, coming back to the discrimination in EU law, I understand that, for example, the American company that is taxed with this digital services tax could try to litigate up to the highest instances, claiming that it is discriminatory. Is that because you said that maybe it's not a big problem, right, within the EU, but I understand that still those companies could litigate, right, that it is not compliant with the non-discriminatory rules, I don't know, equality, neutrality, or whatever.
I could make two distinctions. One is what I mentioned, that if you have the proposal in the directive, you have certain protection. That proposal failed, so we cannot speculate.
Yeah.
So we have to live with what happened after that. And what happened after that is that many European countries have started to implement unilaterally these digital services taxes, copying exactly, the proposal. Of course, the thresholds were accommodated to the reality of the different countries, right? So you kept, these global revenues, but you reduce, the amount of turnovers required locally. The effect is the same. And here is an important distinction to make, because you say, well, can these American companies complain? Well, in principle, no, because fundamental freedoms, unless we talk about the freedom of capital, it's not covering them directly. But we might have easily situations of subsidiaries of an American company that are being affected by this, right? So what happened back then, for example, is France one of the countries that was very active pursuing, digital services taxes, and had everything ready until, they had this trade clash, with the United States. They knew that the tax, was literally affecting in the majority or mostly, non-French companies. Right.
Okay.
So that means you could have an Irish company, just to speak generally, an Irish company that can claim, and that Irish company can perfectly be one of the subsidiaries of Apple.
And now a short break and a quick tip, because we have prepared something special for you. It's a Court of Justice VAT rulings database. It contains all VAT judgments and orders issued since the 70s, with search, keywords and links. And not just that, the best thing is that the database will be updated periodically. And how to get it? By subscribing to our free VAT newsletter. Link in the description. And don't forget to like and subscribe to this podcast for more VAT discussions like this one. And in terms of EU proposal, were there any retaliation steps from the United States? There was some kind of push on this, not to push it through the legislation?
Absolutely. And I could say one of the main reasons as well, because the proposal failed, was because of how the proposal invited retaliation, and I could say also fragmentation within Europe. Retaliation because we had clearly the position of the United States against this. They're not dumb. They realized very quickly, that DST was directed exclusively, to big tech American companies. Some European countries were a little bit too obvious, even when they started, to implement this unilaterally, talking about the GAFA tax. So in reference to Google, Apple, Facebook and Amazon. Some politicians, were not very smart, and they created this anti-US, slogan behind DSTs, without even hiding, the fact that they just wanted to tax, these American companies. So this invited retaliation. The American government initiated an investigation, official investigation, under Section 301. And those investigations, they led to a very predictable result, which was that DSTs are discriminatory, and they tried to use that argument, discriminatory under WTO law. They took that argument and they said, well, if you are going to impose a discriminatory tax against my companies, I'm going to retaliate. How I'm going to retaliate? I'm going to increase, the price of putting your goods in my country.
Tariffs,
right? So tariffs, sure. Right? So now that they are so famous, back then they also were part of the threat, to deal with this, right? And that was the first Trump administration, and they were perhaps less decisive as they have been. This time, but they were very clear with France, at least, which was the most active country, to say, do it, apply the tax. If you affect my companies, your champagne, your cheese, will be very expensive here.
Okay. This EU proposal is pretty clear. Thank you for that. And now trying to move to the unilateral solutions. So I understand there are some countries that implemented the digital services taxes. There are some countries that tried to do so, but didn't decide finally under the pressure or for other reasons. Can you comment on that?
Yeah, absolutely. So as I said before, European countries, after the proposal for a directive failed, decided to implement digital services taxes, by their own, but copying most of the features of the directive. So one of the interesting things is that you won't find many interesting things between one country and the other, because it's basically a copy of the directive now implemented unilaterally.
And the main example is France, I believe, right? This is the
France,
the country that was, as you said, the one of the most active in this field.
Yeah. And then you have others as well, Austria, Italy, Spain, more recently, Belgium, Czech Republic, Slovakia. So you have a long list of European countries that they have, at least by the end of 2024, a digital services tax in place.
And also, I read yesterday that Poland is coming back to this topic. There was an announcement from the Ministry of Digitalization, which is, by the way, very interesting, that not the Ministry of Finance is leading this, but the Ministry of Digitalization. It was announced like two days ago, literally. They announced that they are coming back to the idea and they are going to design the Digital Services Tax in Poland. There is some kind of digital services tax in Poland already, but it is very marginal. It's something else that we are talking about. But the Poland is coming back to the idea, and of course, in the media, the main question addressed to the Minister of Finance, Minister of Digitalization, was: have you already talked with the Americans about this? And aren't you afraid of retaliation? Aren't you afraid or any pushback there? So this is the topic, but it was just an announcement. So we will see. We will see.
I'm not surprised, because if I can say something that we haven't mentioned so far, if you think about digital services taxes economically, purely economically, so let's forget about the legal challenges.
Yeah,
it's a brilliant tax. It's almost like a withholding tax, right? So you have an amount of users that that they won't move anywhere because they are in Poland. And you are going to tax, a small percentage of the revenues that the company generates from those users. Brilliant. It's like getting oil from the soil, So, so it's economically, of course, it's quite interesting for a country as a way to get revenues. Extremely interesting. The problematic, I could say, comes when you start looking at the design of them. Right, and you mentioned the issue of discrimination. We were talking about that, and in a unilateral case, that's a very important issue, under EU law, but also under WTO law. We still remain, within that scope. And then you have the geopolitical scenario.
Yeah.
Today, the threat of tariffs is not like in 2018, right? And we have witnessed that. The United States is capable to impose, high tariffs on commercial partners, historical commercial partners.
Just to interrupt you, for me, as I try to observe all those things and the world in general, the geopolitics and the power play might be the most important things that will decide whether the digital services tax will be in place in certain countries or not. I think that there is always about power, more or less.
Indeed, because the geopolitical scenario is totally different. So you cannot use the old formula to try to succeed in this scenario right now. So you want to have a DST. So this is also a message perhaps for Poland, but do you want to have an EU DST, you need to have a different formula. If you are going to do exactly what you did in 2018 and you're going to have tax targeting, certain very specific companies, and you're going to do exactly the same, of course, your possibilities to get a successful result are very low.
Okay. Do you want to comment, because you I believe you write it in your article, maybe just a few words, because I understand that you imagine some or you design the new approach or new arguments, new way of trying to implement, so to speak, the EU proposal, right? We should talk in some other way about this. We should frame the arguments in some other way, or the politicians to introduce to try to come back to the EU proposal.
Well, what I do in my article is basically to say, if you really want to make this a successful exercise now in 2025, in comparison to what was the failed exercise of 2018, there are a few things that need to be done differently, right? So you want to have an EU-wide DST. I could say still it is possible, but only to the extent that you have certain minimum standards, right? So one of them is, in my perspective, that the EU DST, you need to first of all define yourself. Do you want to have the DST as a way to wait until a global solution comes out? Will that global solution still be Pillar 1? Will that global solution come now from the UN? Or you will completely depart from any global solution and say, I don't care about agreeing on this globally, we will agree within Europe that the DST is the solution.
So the first thing you need to decide whether you are waiting for the global solution or whether you forget about this and go with your own.
Yeah,
that's the first thing. Yeah,
absolutely, absolutely. Because we have a situation right now in Europe that either you go in one way or the other. European countries will still have unilateral DSTs.
Yeah.
Right?
So we have first point. What's the second?
So the second, I would say, is to focus on how you are going to avoid all these discriminatory issues that you had in the past, right? And this, I leave it open to the people of the Commission to decide what they want to do. But I would say think twice if you want to use revenue thresholds. I know that the idea of revenue threshold was focused on protecting small and medium-sized companies, but you can do that in a different way. You could have a tax applied on all sort of companies and then to provide a subsidy for small and medium-sized tech companies. Whatever other solution you can imagine, that's fine. But I could say if you're going to have, again, the 750 million, 50 plus million, whatever threshold, that is a tax that is clearly targeting, those American companies.
It's not going to work. So you're talking about not introducing any thresholds or making it lower?
I could say I'm not a very fan of thresholds. Thresholds are arbitrary, and so nobody can convince me otherwise. And what is the difference between a 750 million company and one with 749.9?
If it should be equal for all, thresholds are always some kind of departing from equality, I guess. Not going to that, but okay.
They are a very complicated feature, I would say, when you design a tax. So I could forget about thresholds. I could focus on tax, that applies this small rate to all companies. After all, it's a very small rate. You want to protect still small and medium size, give them a subsidy that of course you won't give to the big size company, and that's, you forget about the problem of discrimination. That could be a solution in my view.
So it's always about designing the whole public revenue system, not only about taxes, right? Because the question is, okay, without thresholds, for example, but subsidy on the other hand. So it is always a question of designing the whole public revenue system, not only taxes, because they are also, of course, connected. So we have two things. Any other?
The third one, I would say, we need an EU-wide implementation, right? So this is very important because the experience from the past that there was a project, the project failed, and then we started with this fragmented implementation around Europe. Of course, that's undesirable. So we need to go ahead, but we need to go ahead, as a block, as a solution that works, for Europe as a whole. And I would say the last element that is necessary, and I would say perhaps the most important one, is to use a little bit of what I denominate a strategic diplomacy. This is a message for our politicians in Europe. Forget about calling this the GAFA tax. Forget about this anti-American, message. Even if you think about that, even if you want to tax, strongly Meta and X and LinkedIn and whatever other company, you want to do it, but you don't have to say it. You need to be strategically smart in this situation, to avoid precisely, that the tax is perceived in this way. So in this particular case, Pavel, I think there are two things to pay attention to. One of them is how things could be done. We don't need to have this proposal as a separate proposal for a DST. We could easily have it as a part of a general regulation on the digital market in Europe. So taxation is the most relevant part of this big proposal that regulate the whole market, right? So it's not, the focus is not on the DST. It's focused on the general, restructuring of the market. That could be, a good way to do it. And the other way is to simply frame this as a way, for example, to get more revenues for services, digital services generally, avoiding the direct reference to American companies, right? So that was an element that in the past, I could say in 2018, the EU Commission failed to comply with, because they didn't understand back then, and I give it also to the Commission the fact why they didn't understand it, because the geopolitical situation was different. They thought there is a sort of a crazy guy, in the government of the United States. He can do things, but now we know that he is really.
Yeah. Okay, so there is a possibility of coming back to the EU proposal, but there are certain steps that you propose to follow to make it happen, or make it more probable to happen. Before we move to the VAT, I would like to ask you, what are the relations between those things that we are talking about right now with the Pillar 1? Is this something related to the extent that it's worth mentioning here, or the digital services tax is completely different topic that doesn't require any mentioning of OECD Pillar 1? How does it work?
No, it's strictly related. It's an alternative on how to tax those digital services. Pillar 1, if you want to see it, is just a different formula to do the same, right? So Pillar 1, in very simple terms, works in this idea that certain companies, also very profitable companies, over 20 billion revenues and more than 10% profitability. So very, very few companies as well. So we are talking about no more 100 companies around the world. They will be, so the excess profits, so 25% of the excess profits they generate in a particular jurisdiction, they will be distributed among all the market jurisdictions that they have a certain right to tax. How that will be done, under specific sourcing rules that are part of Pillar 1, that's what the OECD calls Amount A. That's the whole discussion about, the Amount A. The second part of Pillar 1 is completely unrelated, is a matter of transfer pricing, so I won't even refer to that. But the strict relationship between Pillar 1 and DSTs is that Pillar 1 is a solution that aims to be global, because it requires, a multilateral convention, and countries would have to apply that. And one of the requirements is that you apply the Pillar 1, you need to stop using DSTs. So the OECD from the very beginning is not very friendly with the idea of digital services taxes, despite of the fact that they consider that this was an option when they talk about the different option to tax the digital economy in Action 1 of the BEPS project.
So generally, Pillar 1 is, let's say, a proposal, a set of rules, set of a kind of approach to tax the activities in different jurisdictions than the headquarters, to simplify a little bit. And the digital services tax is one way of doing it.
Yes, is a way to let's say change the rule in which profits are allocated within a multinational, and of course this is affecting the companies. That they are highly profitable, so will mainly affect those big tech companies as well, among others, of course.
Okay. So just to summarize, we have talked about digital services taxes in general. We have talked about EU proposal that has not come into force. Maybe there are ways to come back to this discussion. Maybe there are ways to try to implement it, to ratify it, or whatever you might call it. But you need to follow certain steps that you propose here and you propose in your article. At the same time, there are many fragmented digital services taxes stipulated in different jurisdictions, different countries around the world. So it seems that it's a kind of difficult situation, let's say, or not to call it a mess, but something like that. And now I understand that maybe one idea is to look at the value added tax as a kind of solution, a substitute, or how do you see it? Why VAT? What does it have to do with all those things that we were discussing?
Right. So you are bringing me to exactly what is my proposal. Because even though in my article I try to say, well, you want to have an EU DST, you still have the chance to do it, but it's still not the best option. The best option is what you already have in your tax system. So Europeans, they have value-added tax that works, I would say, in a way that is highly harmonized among member states. Is of course not discriminatory as a DST, and it has the advantage of being trade neutral. You don't have these implications of trade that you might have with DST, right? So a DST can bring retaliation from the other side of the world. They can say we impose tariffs. If you apply this new tax, this is just our system of taxing, consumers, right? So I could say generally, when you look at the DST, is indeed a more preferable option. Is easy to collect. You know that better than me. You have the whole system, already in force. You have now these recent reforms about the one-stop shop, that allows you to even do it in a quite efficient way. So it's a very, I could say, very interesting way to do it. Now, what is the main issue here? Because many experts of VAT like yourself will be listening to this and thinking, wait a second, so you want to tax digital services taxes with VAT?
Yeah, or maybe I will interrupt you here because we are thinking, hey, digital services taxes, as we described it, are already taxed with VAT, in a sense that, for example, if a American company supply service, as we call it in a VAT world, right? If the American company supplies the service to the consumer in France, and this service, or business person, but let's say consumer in France, and this consumer in France has to pay a certain amount of money for using Facebook or for placing an advertisement or something like that, those revenues in some sense revenues are already taxed with VAT. So what is new about the idea?
Yeah, that's a very important question, because it's true. Digital services taxes are taxed in Europe, most of them. But what the type of services that they are still not taxed under VAT are precisely those that they don't have a cash payment back. So there is no let's say we can put them within the category of free services, right? So
like,
when we
for
think
example, my activity on Facebook as a private person, right?
Exactly.
Providing the data, providing the activity and my data
Exactly.
to the platform for, in exchange, being able to use it, right?
Yeah. So the whole thing here is, so when we look at the directive, on VAT requires, supply of services on one hand and consideration of the other. When we have these services with social media platform that, like in the case of you gave of Facebook or Instagram, and the user, we tend to think that user doesn't provide anything in return. There's no money for using that platform. It's quote and unquote for free. But in fact, if we think that user is actually providing data, so is giving up part of his or her privacy, that is indeed the consideration that is given in return. And with this, I just support myself very much on what others VAT expert has said in the past and more recently as well, that it is possible to value that consideration that you give as giving up your data. So it's not an impossible task.
So now we have like a couple of those digital services that are again supplied from the United States to France, for example, and they are already taxed with VAT because there is a remuneration in money and so on. So this is, I don't remember the VAT rate in France, but let's say it's 20%. So it's this let's say quote unquote revenue is already taxed. Now we are going to taxing those provision of data of your activity and so on. So let's say the taxable base is broader, so to speak. We will come back to that because it's obviously a huge discussion right now in VAT world, connected with the Meta case in Italy and so on, so on. So most probably we will get back to this in a minute. But am I right that also extending or increasing the rate on those digital services taxes that are already taxed right now is also a way to get the same result without calling it digital services tax? Or pretty much the same?
So you mean in terms of revenues?
Yeah, I mean, when it's 20% right now, it's already taxed. There is a one-stop shop in Europe, right? So if you have a consumer that is located in Europe or business activity in Europe, they pay a certain amount, and this American company that supplies this service is taxed with VAT in France. I mean, this VAT goes through one-stop shop to the French state, and now it's 20%. So let's increase this rate to 25, I don't know, 24, 23 on those services. Of course, I'm aware of all those things that are against this idea, but let's increase let's increase the rate, and more revenue goes to the French budget.
Yeah, but you still don't tax those digital services where there is no money consideration.
Yeah, that's a different story. Yeah, I'm trying to systemize it. Yeah.
No, I agree with you. I mean, of course, in terms of revenues, you have the option to simply say, we have already a big amount of digital services, to put it this way, that we tax. So let's just increase the rate and we collect, the extra revenues we need. Fantastic, that's
I'm not for the idea, just to say to everyone, there are many arguments against and so on, legally and economically speaking, but we are just figuring it out, right?
Yeah. No, I'm not putting it on you at all. So I'm just saying that's it could be considered, a solution, but from my perspective, you still recognize, that those digital services from social media platform that today we cannot catch at all.
Yeah. So
they need to be exempt.
One thing,
right?
One way of thinking about this is increasing the rate just to reach some kind of similar effect, but it would need to be, let's say, analyzed in details. The other way is to tax those remunerations that are not in money. Let's call it that way. So. Do you have any more reflections on, because it's obviously connected with Meta case in Italy? There has been going on the discussion in the European VAT for some time right now, whether of course it's a legal discussion, whether it is a consideration, your activity on Facebook or other platforms, and so on. It's a legal discussion about arguments on dogmatic discussion on the law as it is right now. Do you have any comments on that? Would you imagine making an amendment to the directive, to making a change in the law, or wait for the courts to resolve the whole Meta thing? Or how do you see it in this framework that we're talking about?
Yeah, that's very interesting. I have followed very much and very closely the discussion. I know that some very important VAT scholars, they are very pragmatic, and they say there is no way that this is consideration. So let's just exempt this. Is too complicated to value the data. I have read as well, those that are more positive on these matters. I tend to follow very much what one of your nationals, another Paweł Dudek, is a young scholar.
He's working on PhD on that, on this remuneration thing, right? In case of no, I don't know if Meta, Facebook, but those social platforms and stuff like this.
Yeah, he wrote a very interesting article about how we can reinterpret that part of the directive. So we don't need to modify it. So it's just a interpretation of the directive, because when you read the directive says, the supply of services for consideration within the territory of a member state by a taxable person acting as such. And consideration can be anything. Doesn't need to be money. So what he's saying, so this situation I'm talking exclusively about his proposal, is saying, well, this non-monetary consideration, which is in the form of what he calls, enduring measurement, which is your tolerance for the company to take your data, to collect your data. So that is indeed a consideration, as such as the directive is requiring. How do I value that? And then he goes providing, a whole way in which this can be calculated. I'm going to leave that to the VAT experts. But what is very interesting from that proposal, I would say, is that it is possible. You mentioned the Italian cases, with Meta. Those cases are precisely about this issue. Is Italy interpreting the directive and saying, you Meta, you X, owe me this amount of money because those services are indeed within the scope of the directive.
Sure. So that's clear. So we were talking about increasing the VAT rate. We were talking about the remuneration for those activities that are not very easy to put the amount on. Would you be for the proposal of changing the directive in a way that it explicitly indicates that those services are taxed and in this and this manner should be calculated?
Well, of course, in terms of legal certainty, that would be the best option, right? What would be the problem behind that? That you would really have to agree that formula, to calculate the consideration is the formula that everybody has to use, right? Maybe we will have a little bit of, I could say, a clearer scenario after the Italian cases, because that will give us, a little bit of hints of how this could be done, but we shouldn't focus on the matters. I always say that I think I mentioned
Technical
this
legal
to you as well.
matters.
Yes, honestly, these are peanuts in the basket after all. So the big picture here is that we have these services. The directive today allows us to potentially, tax those services. Let's do it. That is an easy way to target those companies rather than thinking about a DST. And one of the things is precisely because we are talking about a consideration that is non-monetary. So who is going to effectively pay the tax? Is a company, the service provider, Meta, X. So those are the ones that they are going to pay the VAT, which is a very interesting thing, Pavel, because from let's say political perspective, you can sell this project in a very smart way. I'm taxing these big tech companies. I'm not taxing you as a user of those companies.
Now I understand your idea in a more clear way, let's say, because now the whole picture is in front of my eyes. If I got it right, that hey, if there are no geopolitical possibility and other possibilities of implementing the digital services taxes or European digital services tax, even if we cannot truly talk about increasing of the rate of VAT, there is a certain economic value generated in the jurisdictions of the European Union that can be identified and from which the tax can be derived, let's say, so to speak. I think that's a good idea, at least, to discuss and to put on the table of the politicians to look at this. Of course, there are many, as you said, legal arguments and so on. But this is something interesting, especially that, as you said, the consumer that uses Facebook still uses it in the very same way. He doesn't pay anything additional. The only entity that will pay is the provider of the service. So
if you want to put it in a different way, what could be a criticism against this idea, which is this is a tax on consumers and it's not a tax on the company, you can revert it very easily in this way. You can say, yes, it's true, but since we have a consumer who is providing a consideration that is non-monetary, like data in this case, is the service provider the one obliged to pay the tax?
So some could say, of course, that then the provider of the service will pass those costs to the consumer or businesses, but it's the same discussion with DST and any other tax in the world, right?
Absolutely.
Yeah.
Absolutely. I mean, that's exactly the same thing, right?
Yeah, so it doesn't
DST
change
can also
anything.
be passed on to consumers, quite easily as well. Yeah.
Okay, Leopoldo, thank you very much. Is it possible to read your article already, or is it going to be published soon?
It's going to be out in Tax Notes International. I think it's scheduled for the 18th of August.
Oh, 18th of August. Okay, so great. So most probably this episode will be published afterwards. So if it is, we will definitely put the link in the comments or wherever it might be on different platforms. So we will definitely refer to that.
By the way, I expressly asked that they could make it available from day one to everybody. That is not behind the paywall, because I think these are important articles that they address, very key policy issues right now.
Yeah, what's most one comment from my side is that, first of all, I would like to say that we, or at least I, don't advocate for any increase in DSTs or to tax Facebook or anything like this. But this discussion shows that there are very interesting ways of thinking about tax policy, of looking for the economic value that was not seen clearly, that could be the political discussion about taxation, and that's it, right? I mean, you are, as I understand, you are not advocating for anything precisely. You're just saying, hey, there is something going on in the economy that can be a subject of political discussion, of political choice, whether this is a good way to derive revenue from, and so on.
Exactly. That's the best way to put it. This is not I'm not trying to reinvent the wheel and say, this is a perfect solution. I'm just saying, in the geopolitical scenario we are right now, what is the best option that we might have? And I could say VAT appears to me to be the most appealing one.
Okay. One last question for you. You are a reader in tax law at King's College London. Is it a reader a kind of historical or traditional name of the position that you hold, or how does that work?
That's a question that I receive very often. So in the old-fashioned English titles, so reader used to be a title above associate professor and below full professor.
Oh, okay. So it's above associate professor and below full professor reader.
That's in the traditional sense. I could say that for many right now, reader could be equivalent, to an associate professor, but still it's a very it's a very different title, because you need to be very active in research and recognized to get that title. But to be really frank with you, Pavel, it creates more uncertainty than clarity, because before that I traveled the world saying I'm an associate professor. I'm a reader, and people ask me,
what are you doing? Do you read or what?
Exactly.
Right? I understand. I remember my professor at the university used to say that, France is like this, Germany is like this, and in the UK everything is different. So also in this case, and different in a sense that they derive all those meanings from the very traditional historical traces or whatever. So this is the case also in this instance. Okay, thank you very much once more. It's been an honor for me, Leopoldo. Thank you for being here, and thank you for participating in this episode.
Thanks for inviting me, Pavel, and I hope that your audience can enjoy this session.
Okay. Thank you very much. This was the Vatvocate podcast, a place where we discuss everything that's connected with value-added tax from the European and global perspective. And please, all you be invited for the next episodes. Thank you.
Welcome to the Vatvocate podcast, where we explore all things value-added tax to give you the insights you need as a VAT professional.